Initially, the pretty low-hanging fruit is to get off zero. There's a lot of right answers for how much Bitcoin you should have, but I think that if anyone who looks into it generally finds that zero is not one of the right answers. I would advise people against unit bias. We look at it as 21 million Bitcoin, but it's actually 2.1 quadrillion units. In the actual code, that's the actual unit. It's just the underlying Satoshi unit that we call it now. Satoshis are still very cheap, and I think the network is still very small compared to what it could become and what it should become, as long as some core tenets of it keep working as expected.
In this powerful interview, Lyn Alden breaks down why Bitcoin isn't just a speculative asset, but a once-in-a-generation savings technology. She explains how Bitcoin gives individuals a way to preserve their wealth outside of a system rigged by inflation, currency dilution, and structural inequality. Lyn also shares how even at just 0.2% of global assets, Bitcoin's real adoption is still in its infancy, and why that matters more than ever. Stick around until the end to hear why Lyn believes Bitcoin may be the only tool powerful enough to break the cycle of wealth erosion for everyday people, and how you can start using it wisely today. Also guys, if you like our cryptocurrency content, please remember to like and subscribe to stay up to date. Now, over to Lyn.
Is this a meaningful escape hatch for the average person, for the average American, to try and break this cycle that they have no control over?
I think it's the best tool that's available. I don't think it's a silver bullet for every single thing. So for example, that probably mentioned with wages, if you earn X amount of dollars per year and money supply is growing at a certain rate, you may still have trouble with your employer getting the wage that you deserve to kind of keep up your share of the ledger. That's still a challenge, but at least it helps with the savings side of the problem, which is to say, if you're looking at things you could purchase, like a savings bond that's giving you interest rate below the money supply growth rate, or a savings account, or a very highly valued equity, or a very highly valued house, that's not immediately meeting your shelter needs, Bitcoin is a very powerful savings device. The fact that it has no long-term supply growth once it reaches its total number of units. And this is where it gets challenging, because there is like an early advantage, which is to say that right now you benefit not just from Bitcoin's qualities, but the fact that it's being recognized by the world for its qualities. So there's a gap between, what this network, how cool this network is basically, and the world kind of over time, because these things can take a generation or two to test its qualities, come to appreciate its qualities, and then for many people grow up with its qualities. So changing is always harder than just growing up and something exists. And so Bitcoin has to go through some maturation process. And if people are feeling disenfranchised, they tend to look a little bit more for non-traditional solutions. And the risk there is that they could fall into scams and other kind of false promises. And that's where I think Bitcoin really threads the needle, which is to say, this is the most powerful thing around. A lot of intelligent people have looked into it from a variety of different backgrounds and said this is actually a pretty powerful thing, and that it can help you as long as you, I think, approach it kind of humbly, and as long as you don't then push further into kind of things that end up actually being frauds and scams and things like that. So I think this is, in the near term, I think it can help people individually, and then should it become large enough and should it become something that people just kind of naturally grow up with, I think it can affect things at a more macro level, for like our children's generation and grandchildren's generation, hopefully.
It's often characterized as this speculative investment. Is it both a speculative investment and a savings mechanism? Do you view it as more so a technology for savings?
So I classify it as an emerging store of value. So it's an emerging savings technology. If you were to say in 2011, so 2 years after it came out, is this savings technology? I would say at that point, it's very early. It's not been tested, in many different scenarios yet. The legal status was very unclear. It's a very small, highly volatile network. But every year that goes by, and as the asset becomes more liquid, more widely distributed, tested under different conditions to see all the different ways that the network holds up against what life throws at it. As we're now like 16 years in, I think it has transitioned more toward savings technology. As something that can be relied upon. And I still think it has a ways to go. That volatility can shake people out, and it does require more research and conviction than what we normally think of as a low-risk savings asset in order to get in. It takes some degree of unconventional thinking or willingness to think outside the box to be meaningfully interested in the network before the majority are. And so I think that's probably the best way to think of it, is that there's a spectrum that Bitcoin is going through, and as long as it continues to be successful at the things that it's doing, it moves that dial from early speculation, statistically this probably won't work out, but maybe it will, to, hey, this thing has been functioning for 16 years. It has higher uptime than FedWire. It's been the largest, most liquid, secure cryptocurrency for every one of those 16 years. That's not the same asset per se as it was, 13, 14, 15, 16 years ago. And I think it'll, as long as it keeps growing and solidifying, it'll be a different asset at year 25. And that's how I approach it.
Lyn Alden doesn't just talk about Bitcoin as an investment. She frames it as a lifeline in a system that's rigged to quietly erode your savings. She urges people to stop overthinking and simply get off zero. You don't need to bet the farm, just start. Buy a little, move it, self-custody it, learn by doing. Because sitting on the sidelines while your money is diluted is far more dangerous than a bit of price volatility. She reminds us that inflation isn't just a number on a chart, it's theft in slow motion. Prices should naturally fall with progress, but the system keeps printing and the value of your time and labor keeps slipping away. Bitcoin, she argues, is a way out of that cycle, a monetary protocol that doesn't erode, doesn't inflate, and doesn't care who's in office. And for those calling it old tech, she's crystal clear. Bitcoin is a monetary protocol, just like Ethernet or USB. It's simple, reliable, and it's already won the network effect. 16 years in, it's battle-tested and still at only 0.2% of global assets. That's not late, it's early. This isn't just about price targets or predictions, it's about understanding what's at stake and realizing that if you wait for everyone else to catch on, you'll already be behind.
What in your mind is the best strategy for the average person when it comes down to, okay, I want to start getting some Bitcoin, I want to start saving in Bitcoin, but where do I start with this? How much do I buy? What do I do here?
There's a danger at buying too much that exceeds your conviction level or your volatility tolerance, because you're more willing to get shaken out of your position at a loss or during a big sell-off. I don't think it's right to kind of rush in more than you're comfortable with. I think initially the pretty low-hanging fruit is to get off zero. There's a lot of right answers for how much Bitcoin you should have, but I think that if anyone who looks into it generally finds that the zero is not one of the right answers. So I think get off zero, and then there's a couple steps you can make. You can experiment with it to some extent. You could buy some from an exchange or a brokerage, and then pull it into your own self-custody and try sending a transaction with amounts that you're comfortable with, given the research, with like a simple mobile wallet, and you can graduate toward more secure options for larger amounts if you decide to go that route. You could also invest some time into reading a handful of Bitcoin-related books. It's not necessarily the first thing you want to do is, if you want to get them into Bitcoin, you don't necessarily shove them a 400-page Bitcoin book. But if someone, for example, watches this podcast or watches your series or is otherwise interested in the asset, I think the next step is to spend a weekend, read a couple high quality sources on it, so that you get more of the details than we can cover in a conversation like this, and then consider getting off zero. And generally, the more you learn, there's some research that shows basically the more someone is knowledgeable about Bitcoin, the larger share of the net worth it ends up being. So my general view is that if there's a time where it makes sense for you to increase your holdings substantially, I'm not the one that tells you that. You're the one that figures it out for yourself and decides that your level of understanding or comfort with the asset has increased, and therefore a larger position might be right for you.
What do you wish people understood about money today, about the system as it exists today, that maybe is not widely understood?
So I'll give two answers. One, because one of them is kind of a repeat, but I'll rephrase it, is I think that the biggest thing to realize is that the baseline for price inflation is not zero. It's negative, because on average we get more productive at things, not less productive. And therefore, the thing you always want to focus on, the question you want to ask with most financial assets is, what is my rate of dilution? If I'm holding dollars or any other currency, look up the long-term growth rate of that thing you're holding, offset by whatever interest rate you expect to get on that holding, and that's your net dilution. So if your money supply is growing up by 7% a year and you're getting a 4% interest rate, you're getting diluted by an average of 3% per year. Your share of the network, aside from new income that you're actively working for, just your passive share of the network is shrinking. And it means someone else is growing, someone else is getting that. And so that's number one. And that applies for multiple things. That applies for, if you're holding gold, your long-term dilution rate is somewhere around 1.5%. And you can look that up for yourself. If you're holding equities, sometimes they're issuing shares, sometimes they're buying back shares. You can also think of it in terms of market share, or other companies kind of taking market share from your company on average, or your kind of national stock index. And then same thing with real estate. If you own real estate, there's some degree of new growth, that like the new construction that's happening. And so your share of, all houses that exist is shrinking, which can be a funny way of looking at it. But I think if you apply that lens to everything you could own as savings, that's a really important baseline. So CPI is not your target. Not getting diluted is one of your main targets. The second thing I'll say is actually about Bitcoin rather than the existing system. People ask me one thing I wish they'd know that I don't see commonly mentioned. There's a natural tendency to assume in technology that new things displace old things, that anything newer is going to be just better in every variable than older things. So new computers generally better than an older computer, for example. Newer software is better than software from a while ago, with some exceptions. So people naturally assume that, okay, Bitcoin is cool, but it's 16 years old. Why shouldn't I assume some of these newer ones are better? And my general answer to that is the main exception for that rule of newer technology being better is communication protocols. So things like Ethernet, that's 50 years old, we're still using Ethernet. USB, something like 30 years old, we're still using it. Simple mail transfer protocol, something like 45 years old, still going strong. Internet protocol. So far, in the age of the internet, the answer for how long a communication protocol lasts once it becomes dominant is indefinitely. We don't really know how long these things last because they're going on decades and they're still just as strong as they ever were. And some of them gradually update over time. So Ethernet is faster than Ethernet from 20 years ago. USB 3.0 is faster than Ethernet 1.0. And what they have in common is that they achieve network effects, and they're by design, they're purposely simple. And things that change more rapidly are on the edges of the network or on higher layers of the network. And Bitcoin, I would generally argue, is that 16 years in, it's the dominant communication protocol for money, and it exhibits very similar dynamics or similar, aspects to those other types of communication systems. And I generally think that's the right way to conceptualize it as a technology, not as something that keeps coming and disrupting the prior thing, but something that, comes out, gets tested, wins whatever early dominance it needs to win, achieves large market share, and then becomes a pretty persistent part of our digital lives.
Does that mean it's fair to say that for somebody who's still hesitant maybe about Bitcoin because they're feeling like I've missed the boat, I'm too late, does that mean that they're still early in this development?
I think so, especially on a risk-adjusted basis. It's not as early as 2011, but it takes much less risk than it did in 2011. And one way to think of it is that the Bitcoin network is something like 0.2% of global assets. Gold is something like 2% of global assets, so about 10 times bigger. And all the other assets together, so savings accounts, bonds, real estate, and equities, and private businesses, that's the other 98%. And so one way to think of it is, what is the total addressable market of a portable, leading type of money with no long-term supply growth that you can self-custody yourself, or that you can send to anyone in the world in seconds or minutes, depending on what layer of the network you're using. I think that's worth at least several percentage points of global assets. Some people have higher estimates, and they're not necessarily wrong. I think 0.2 is still early. I would advise people against unit bias. We look at it as 21 million Bitcoin, but it's actually 2.1 quadrillion units. In the actual code, that's the actual unit. It's just the underlying Satoshi unit that we call it now. Satoshis are still very cheap, and I think the network is still very small compared to what it could become and what it should become, as long as some core tenets of it keep working as expected.
The deeper you look into Bitcoin, the clearer it becomes. It's not just an asset, it's a response to a broken system. Lyn Alden makes it clear that inflation isn't a bug, it's the feature of a monetary system stacked against savers and wage earners. But in a world where our purchasing power is quietly eroded year after year, Bitcoin offers a powerful alternative. a scarce, decentralized store of value that gives individuals the ability to preserve wealth and escape the silent tax of fiat debasement. More than a speculative bet, Bitcoin represents a technological breakthrough, a monetary protocol with the potential to restore fairness, transparency, and long-term savings. It's not too late. As Lynn points out, we are still early, and those who take time to understand the system and the solution are positioning themselves ahead of the curve. Thanks for watching, and if you enjoyed this video, please remember to like, subscribe, and share your thoughts in the comments section below.